That's one great way to make your money go further, but you really need some help in this economy right now, making sure that you are properly aligned with your investments. Every penny counts here. And we're very fortunate once again today to have Steve Sexton from the Sexton Advisory Group here. Steve does our Money Minute segments, but in this case, we don't think a minute's going to be long enough. So we've asked Steve to sit in here for a little bit longer today. Give us the overall view. We hear the president talking about balancing the budget, raising taxes, Republicans saying, no, that'll kill business. What's the overall investment picture that you're seeing?
Well, here we go again, so to speak. Everybody's receiving their brokerage statement, their variable annuity statements coming out next week. And we have a number of world leaders. I'm not talking politics. We have the International Monetary Fund chief saying, hey, we're on the verge of a world financial crisis. Tim Geithner even said the same thing. Most economists are actually saying, you know, we never got out of this recession. We're still there. Ben Bernanke says, hey, we're not going to raise interest rates for 2 years, and they're thinking about doing quantitative ease in 3. And you know what? We have Greece that just laid off 85,000 people in their government so they can qualify for a new loan. Now, this tells us, hey, world crises are coming, and that's going to affect us financially.
So you've been putting money away for years in various investments for your retirement. You're looking at it now and probably starting to sweat.
Oh, yeah.
And rightfully so.
Oh, yes.
So what do you advise then?
Well, here's the big thing. There's a number of reports. One's called the Dalbar report. It talks about investor behavior. And what we find is most investors are making decisions based off emotion, unrealistic expectations, misinformation, and myths. For example, they walk into their advisor's office. They see this 50-year Dow chart showing a 10% return and say, I'm going to get that. Okay?
Oh, well, of course.
And according to the Dalbar report, you know what? They're only averaging 3.6% over the last 10 years. Now, how is this happening? It's simple. The unrealistic expectation of getting that type of return. Now, we've had, average bear markets are 17 years to 25. The average return in a bear market is a little over 1%. So if they're looking to get 10%, that isn't really realistic.
So that's where you start, is being realistic.
The next step is getting all the information. Most people talk about getting a certain allocation, but they don't talk about the fees and expenses. According to Boggle, which is set up by Vanguard, the average fees on an account is about 2.5%. Now, most people in mutual funds will pay an average front load of almost 6%. So they go into a mutual fund, they're going to pay 8% of their portfolio to that mutual fund.
So all that's happening there is that just ensures the people that run the funds and administrate these things, they're getting paid.
That's true.
They're doing fine then in this market.
That's true,
okay.
But the thing is people don't know what's going on.
Right.
The second thing is taxes. Most people don't realize there's a phantom income taxation when there's a sell-off inside your mutual fund, and somebody might have a $500,000 portfolio, could get $15,000, $20,000 a year in phantom income taxation, but the tax is about $2,000, $2,500. But when you add all that stuff together, that 10 turns into about 3.25, 3.6. So those things are very, very, very important that people understand those things before they move forward.
So now, one of the things that you do is you offer these great workshops. And I want to spend a little more time talking about that today because people are saying, okay, you have my attention now. Now what do I do? Now, we're not going to cover everything in a couple of minutes here that we have remaining, but you can get them into these workshops and really make some great headway.
Oh, yeah. What we're going to do in the workshop is this. People look at me up here and they go, oh my God, what questions do I ask? Okay, we're going to teach you the questions to ask. The key here is to understand what questions you need to ask in order to identify ways to ensure that you're making the right decision. Because you know what, if you have that discussion with your CPA and your financial advisor, and your CPA says, you know what, here's the taxes with that investment, and your financial advisor says, here's the expenses, fees, charges, and what's the likely return, you might say, you know what, for 4%, I'm not taking that type of risk. And if you can learn those questions to ask that CPA, that financial advisor, it puts you in a lot better space.
So it's a perfect way to start, and I think most people can understand that. They say, look, I don't even know which questions to ask. You'll get them started at that point and then move forward from there. And certainly if they need more help, you're always available to give them the help that they request.
Oh, yeah. In fact, you know what? That Dalbar report, it's about investor behavior. If they want the report, they can go to our website, or they can come to one of our workshops. They're in Rancho Bernardo next week, and then 2 weeks from now, I believe it's going to be in Palo Mesa.
That's right. I see we'll put it up there on the screen for September the 27th and 28th at the Rancho Bernardo Inn, and then October 11th and 12th at Palo Mesa Resort. You just need them to call and make a reservation?
They can call, make the reservation, they can go to the website, or they can call our office at 1-800-560-2611.
All right, folks, start off with a solid foundation there, meaning you need to know which questions to ask, and Steve Sexton will help you out with that from the Sexton Advisory Group. Always great to see you. Thanks.
Thank you.
And next time we'll try to squeeze it into a money minute. All right, thanks, Steve. Always good to see you.